All right, let's talk about AeroVironment, ticker AVAV. So they just dropped their Q1 numbers, and wow, it was a mixed bag that sent the market spinning. We're talking a huge beat on revenue, but then a miss on earnings. The stock went absolutely nuts. So what we're going to do today is cut right through all that noise and give you the clear analyst's take on what's really going on. Okay, so let's just get right into it. We're going to start with those headline numbers. You know, the ones that caused all the confusion for investors right out of the gate. Because on the surface, this thing is a total contradiction. And here it is, the central conflict in a nutshell. On one side, you've got this absolutely massive beat on revenue, which, screams incredible demand. But then on the other side, the company just barely missed its non-GAAP earnings per share estimate. So you have to ask, right, what is actually going on here? And when you look at the actual numbers, the scale of this is pretty wild. I mean, the revenue wasn't just a beat. It was a beat by more than $17 million. That's a huge number, and it represents a mind-boggling 140% growth year over year. But then you have this tiny non-GAAP EPS miss of just 1 cent. It's almost nothing, but hey, a miss is a miss. So how did the market take all this in? Well, with a whole lot of confusion. Initially, the stock dipped about 2.5% after hours. But then the next day, it was pure chaos. We're talking a trading range where the stock swung almost 20% in a single day. I mean, that tells you everything you need to know. Investors were completely struggling to figure out what these conflicting signals meant. Okay, so let's get to the why behind all this. What's the real reason for this complicated, kind of messy picture? Well, the answer comes down to one single, huge event. This was the very first full quarter with the massive BlueHalo acquisition baked into the company's results. All right, to really get what's happening with the earnings, you gotta know about this one little accounting term, purchase accounting amortization. It sounds complicated, but it's pretty simple. It's basically a required non-cash expense that happens after a big deal like BlueHalo. The important part is that it makes the official profit number look worse than it really is. But it's just a temporary accounting thing. It's not a real cash loss for the business. And here's the impact of that accounting rule. The official, by-the-book GAAP EPS was a loss of $1.44. Now, where did that come from? It was driven almost entirely by a nearly $80 million charge just for that purchase accounting stuff from the BlueHalo deal. So, and this is the most important part, right? This big loss you see, it's just accounting noise. It is not a sign that the actual operations are weak. And this chart just perfectly illustrates how much this company has changed. You really have to stop thinking of AeroVironment as just a drone company anymore, because this acquisition has created a brand new powerhouse segment. I mean, look at this. The original autonomous systems business brought in about $285 million, which is great. But this new space, cyber, and directed energy segment, which is mostly BlueHalo, is already kicking in almost $170 million. That's a huge deal. Okay, so now that we've pushed all that accounting noise to the side, let's focus on the real story here, the powerful growth story that management was trying to tell investors on the earnings call. And it all starts with this number right here, $455 million. That's a record-setting first quarter revenue. This is the entire foundation of their argument, and the message is simple. Demand for what they sell is at an all-time high. Then they point to this, a massive funded backlog now sitting at $1.1 billion. And let's be clear, this isn't just some theoretical pipeline of maybe sales. No, this is secured, contracted revenue that is already locked in. It's just a matter of time before it shows up on the books. And this number right here might be the most important one for any investor to understand, 82%. That's how much visibility they have on their total revenue goal for the entire fiscal year. Think about that. To have that level of certainty this early in the year, it's just incredible, and it's a massive signal of how confident management is right now. And that confidence, it wasn't just talk. It translated directly into their full-year outlook. So they kept their strong revenue and EBITDA guidance exactly the same. But here's the real kicker. They actually raised their non-GAAP EPS guidance for the year. That's them telling the market, hey, we know we missed by a penny this quarter because of accounting stuff, but the real underlying profitability for the whole year, it's actually looking even better than we thought.
And the CEO, Wahed Nabi, he really summed it all up on the call. He said AV is uniquely positioned as a leading defense tech prime with our innovative product offerings along with the experience and capacity necessary to scale manufacturing on an expedited timeline. What he's saying there is that the company is graduating. It's evolving from being that niche drone maker into a major diversified defense technology player, one that can go after the really big, complex government contracts.
All right, so with all that in mind, let's zoom out a little bit. Let's put this whole story into the broader market context and see how AeroVironment is really positioned against its peers. So even with all the choppy price action right after earnings, just look at the 3-month performance here. AV has absolutely crushed the broader defense sector ETF. That's ITA. It's up over 18% compared to just about 7% for the sector. What that shows you is that leading up to this report, there was some real, strong investor belief in the company's strategy. And that belief isn't just based on nothing, it's being fueled by some incredible progress. On the call, management was just ticking off major wins that are going to fuel growth down the road. We're talking about a massive $240 million award for laser communications, the first deliveries of their Locust laser weapon system, making progress on their next-gen P5050 drone, and launching a whole new AI-powered software platform. It's a lot. Okay, so that brings us to the big finish. It's time to put all this information together and give you our official take. The next call. So, after digging through the revenue beat, the earnings miss, all that accounting noise, and that absolutely massive backlog, what's our final call on AeroVironment right now? All right, here's our call, broken down into 3 simple steps. First, our prediction for the next quarter. We expect to see a huge conversion of that backlog into actual revenue. Why? Because management flat out said on the call that enormous funded orders are coming in Q2 and Q3. Second, our thesis on the stock price. You should probably expect more of that short-term volatility as the market gets its head around this new, bigger company. But the long-term upside? It's absolutely there, and it all depends on them executing and turning that giant backlog into profit. So, that leads us to step 3, our final rating, outperform. At the end of the day, the record demand, the incredible visibility they have, and the raised profit guidance, it all just completely outweighs the temporary accounting mess. This is not financial advice.